Hi and welcome to this week's edition of The Week Ahead. Now joining me this time is our LCG analyst Ipek Ozkardeskaya. Ipek, let's roll on to next week. Now Fed Chair Janet Yellen is giving her testimony on monetary policy on Wednesday afternoon GMT. Now given today's non-farm payrolls read, do you think a March rise in US interest rates is even more unlikely now?
Absolutely. So we have seen the NFP print very weak compared to expected. The market was expecting already more than 100K less than last month. So last month read was a strong 292,000. This month the expectations was 190,000 and the actual read has been 151,000. So this is very weak and it confirms the concerns about the fact that the Fed may not be in a position to continue with this rate hike program. And the March expectations for a rate hike has fallen to 10%, which means that the market does not give any chance for a March action following all the global developments. So now we are going to hear Fed's FOMC Chair Yellen speaking in front of the Congress, and we believe that she will still have a very cautious tone. She will certainly not rule out the possibility of a rate hike in 2016, although the market doesn't think that any action would be necessary until December 2016. Yet it's going to be, we stand ready to hear something really dovish. Now, the NFP, the market reaction to the NFP print was mostly dollar positive. This is not because the dollar was meant to rise, but it's mostly we have seen this buy the rumor, sell the facts. So we have seen an aggressive sell-off across the week in the US dollar and against all currencies almost. So this is just a correction. However, it seems like we will be witnessing some more softening in the US dollar in months ahead.
Okay. Well, we had obviously Super Thursday this week as well. Next week, we've got another central bank rate decision by Riksbank. What's the market expecting here? Because the market seems a little bit divided over whether they're going to cut rates again or whether they're not, and whether they actually need to or should.
Well, actually, what we see now is that the dovish game is on. All central banks are moving towards more easing in their monetary policies. We have seen last week BOJ cutting rates into the negative territories. ECB President Mario Draghi said this week that they cannot be relaxed about waves of continuous sell-offs. We have seen the Fed expectations fading with the weak economic data. We have seen Super Thursday. Mark Carney just clearly said that yes, the next move of the BOE is not going to be a rate cut, but a rate hike. But this rate hike will most probably wait until at least next year. So in this context, Riksbank looks like it is going to be. It might do something. So the consensus in the market expects a 10 basis point cut. However, it might not happen. So not everybody is in line with this view of more negative rates. It may also happen that Riksbank decides to add on more quantitative easing. However, it looks like something is preparing. So it is worth keeping an eye on Swedish krona next week.
Okay, you mentioned Mark Carney and the BOE there. Speaking of the BOE, we've got UK production data, industrial and manufacturing data next week. What's the market expecting?
Well, the expectations are weak. So we are talking about December. In December, we saw a continuous rout in. That was the end of the year. The rout in commodity and oil prices were there. We had very weak markets. The sentiment was not positive at all. So we may see some flattening in the manufacturing industrial production, but we don't expect to see any positive data or any surprise on the upside. But the market is prepared for this. It is already being priced in, and I have seen a report which is interesting, saying that the industrial production's contribution to 0.5% growth on quarterly basis on the GDP has been only 0.03 percentage points. So this is quite low, meaning that even if we see a slump in the industrial and manufacturing production in December data, we may not expect to see a significant impact on the GDP. So on that side, it's going to be okay. And we have seen the pound depreciating significantly over the last couple of months, and that might help all these manufacturing and industrials taking a little bit of breather, even if we have seen some upside this week. So on that side, we do not expect to have any surprise.
Okay. You mentioned sterling there. I want to wrap up on euro. I mean, we've got Eurozone GDP growth figures for the fourth quarter. What's the market expecting here? Are they
0.3% on quarterly basis, no change. So as we say, so we do not expect any upside surprise either. We have seen some Paris attacks. French sentiment has not been brilliant. Germany seems to be moving a little bit ahead of the game. Spanish economy is expected to move a little bit outperforming others maybe, but the expectations are still very much flat. And it seems like, it's not, the fourth quarter is not going to be hiding any surprises, not for the UK, not for the Eurozone. So we expect quite flat numbers out there.
What does that mean for euro dollar then next week?
Well, we have seen euro dollar surging to significant levels. We have crossed about 200-day moving average, which was standing at about 110.55 levels. This was not because of a significant appetite in the euro, but it was mostly due to a broad-based and aggressive sell-off in US dollars. So we have seen the euro dollar rallying about 112. So 112.50 was tested. We see midterm resistance at 112.60 levels. So at this point, we know that the ECB's Draghi is not comfortable with these levels. And he came in and he said that the ECB will not remain with their hands tied. They might do something in order to stop the rally. But at the moment, we might see some more consolidation at these levels. Macro players would be well placed that once this rally comes to an exhaustion, then it might be a good time to enter fresh short positions. However, right now it's very difficult to say because the momentum is very much on the upside. If we go about 112.60, we might even test 114.95, 115 levels. Yet, once again, we do not believe that the euro dollar will have more potential on the upside simply because the ECB will certainly step in and say, okay, this is enough. Now we're just going to slow down this curbed appetite and let the euro a little bit slide. And we might see at midterm a setback to 110 levels.
Okay, thank you very much, Ipek. We'll leave it there. That's all for this week's edition of The Week Ahead, but join us next week. Goodbye for now, guys.